Welcome to TradeNBI.com. This is John. This report is for the 25th of March. And well, yeah, that was a pretty strong short cover rally as we expected here with the magenta above the 25 as well as uh, above yellow and shorts in the NBI white rising. It was a classic case, and we pointed out exactly how that would go. Still don't have a reset though from short-term buyers. So that's going to continue to be a problem, and it suggests that we may not get too long a rally from it without some kind of reset in it. Midterm and short-term buyers, from a DOC standpoint, are been what's holding it up, and we saw that first when we had the dip of orange below the red, and then a secondary one right here. It gives a little impetus to this, but when this kind of move, you're going to expect some kind of retrace into it. But that shakeout build still in the negative, but far better than it's been. So we've passed that phase of liquidations. What this does, though, is that when you have this many call buyers and that push things up, they've got new cash, so they're going to be able to potentially continue to drive things after they take some short-term gains. Shorts have been wiped out, so to speak, from that kind of move. You can see the Nasdaq, but again, it's interesting. MBI White, from the Nasdaq standpoint, still climbing even within that. So people are seeing higher prices and opportunity. Those that waited after they took their profits down at the bottom here, looking for some kind of pop to be able to short back into, and you could get a second round. This is where the data is going to start mattering because. The expectation will be that you're going to have an effect on growth. And as much as we talked about, what Trump's trying to do, he's touting all these long-term investments, and they are, but they'll take a year or more before you'll get the effects of them. And from a Treasury standpoint, rates, still stuck in this range, but probably going to be on the upper side of things for a little while. Everyone's looking for the Fed to, see weakness and want to ease. But here's the real problem right here, and it's oil. Where Trump coming in, drill baby drill, is not having the desired impact at this particular stage. And we talked about all the reasons why that wasn't going to be. You had the fade off of the potential hype of things, and now the realities of it's going to take longer than some people thought. And, that's problematic. You really need to see oil fade in a dramatic fashion in order for things. Now, prices from a lot of consumer goods have faded. That's going to help the consumer, but how deeply they've been damaged by the inflation that's come through, and whether the wage gains that they've earned help offset it. Yeah, that's from a practical standpoint, there just isn't a lot of left over, and particularly with the market having been in a soft period, you don't have that extra liquidity. And so I think that could start to cycle itself in the form of a snowball effect where, you get continued weakness from the consumer. And that's definitely going to have a huge impact. And we'll start to see it when we get the first GDP readings and that coming from Trump takeover. I would expect that they should be rather weak overall, simply because of this transition. When you're moving this amount of government money out of the system, you don't quite have that transitional takeover yet of new investment, and that causing a prop up. Then you throw away, all the subsidies to, whether it's illegals or anything like that, or call them migrants, and that's a definite cash flow situation from a regional standpoint. So those impacts are going to be real, and it's just a matter of time before it's reflected in real estate and things like that. In the short term, like I've said from the beginning, commercial real estate in the longer term is definitely going to be a benefit from all this, because that capacity for all the companies that have to come because of the targeted tariffs. And you can see they've kind of muted a lot of the tariff situation because of it. And that's a bonus. Now, I keep the euro chart up here because the euro is really facing a quintessential crisis here. If peace doesn't work out, which it's not looking like Zelensky's headed that direction, you're going to have better relations with the U.S., with Russia, which eases tensions, but the EU beating the war drum still, wanting to take over for the U.S. role. Can they do it? No. not possible. And that's just going to decimate the euro. And like I've said from the beginning when we first talked about Trump's election way back last year, will the euro even survive the 4 years? And they're in for a rough road. From a gold standpoint, it's going to be back and forth in this particular case. With oil continuing to maintain where it is, there's no reason for gold in a large sell-up. But if the market fades off a lot, people might have to liquidate in order to cover those things. We see the same thing with Bitcoin, and it trades relatively close to what the Nasdaq has been doing. And a nice little pop there, but fading off some of that already at this particular stage. And again, there's more than enough willingness here to see, MBI White with leads of shorts, not afraid to attack into these rises. That's a very different consideration than you've had in the past. And ETH here still lagging dramatically relative to them. And, this idea of this crypto dream kind of muted a little bit at this particular stage. So, the buy signal coming in early on from the basing after the MBI Whites that were lead there once Magenta took over, and you had the strong lead. You had that little pause right there, gave you an opportunity once the Magenta popped back above right about here, and sure enough, was able to take that ride and then just collect the bonus. It doesn't mean that you're not going to get a little bit of fill back here with another run up, but this particular stage, 50K, is a little bit soft, but you can see that complete reset here from a short-term buyer standpoint. So where you don't see that on the daily, intraday, you're seeing a lot more action. Not to mention you still have Cyan under red, which always buy. It's just a matter of taking the opportunity to get that turnaround configuration and capture the next run. So it's all pretty clean stuff from our viewpoint. Intraday, you can see there really wasn't a lot of everything had taken place in the pre-market there. And then you had the slight bump during the day, which allowed more call buyers to jump in, and then they used that to switch over to the puts and drove away some of that, and then they let it run back up towards the end of the day. And here we are in the post market. It's soft. Is the best way to describe it. And I think some of that's going to be a reflection in the Eurozone. When they start to have more difficulties, I think you'll start to see some of that intraday action that's, from the New York side of things be very different than what you see in the European sessions as they begin to struggle. But, we'll continue to follow it all along. As always, it's just a matter of following the pink bars and going from there. But the broader economic issues, I think, is going to start to have a bigger headwind going forward here. And once we start getting some numbers and seeing how they're adjusted, it's going to have an impact. So, as always, though, anything relevant, I'll put on the Skype chat for us. Have a good one. Trade well.